good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain, with me Saisha Faridi, and the closing trades have turned for the worse because there's a bit of a tumble that we are seeing in the market at this point of time. Nifty has taken a bit of a knock, continues to be around that 19,300 mark, and it's really the sideways move that has continued for the past many weeks, and we failed to break out of that range on the upside at least. Having said that, it's a broader markets which is trying to kind of fight a bit because that's showing a bit of a mild outperformance, and a bank Nifty has actually slipped into the red in the last few minutes itself. So the underperformance is actually coming in from bank Nifty, especially the PSU banking space. The sectors which are outperforming today are real estate as well as chemical stocks. They are firing away in the trading session. Whether it's a Lodha or a India Bulls Real Estate or a DLF, all of these counters are doing quite well for themselves despite the weakness that we are seeing in the rest of the market. And ditto can be said for the specialty chemical sector, whether it's a Himadri, specialty chemical, GHCL, Alkylamine, all of those stocks are up anywhere between 5 to 10%. But apart from these couple of pockets, Aisha, really not much happening in the markets.
Really nothing much happening. It's flat as flat can be. Having said that, you talked about some of the specialty chemicals and fertilizer names. So Deepak Nitrite, for instance, 5.5% higher there. There's Bharti Industries as well, almost a 4% notch up. And then, of course, there is some follow-through buying within the PSU pack. Look what's BHEL up to after a phenomenal move in the stock yesterday and all of last week. Today as well, it's sitting at the high point of the day. And mind you, for the better part of today's trading session, the stock has done nothing and has been flat. And now the shoot up really comes in, scaling up higher by about 3.5% as we speak right now. Of course, there are a few more other movers like a Jindal Steel as well, which has spiked up 4%. IGL has had a good day, about a 4.5% or 3.5% uptick coming in there as well. But largely, metals are the ones which are seeing an uptick. So besides Jindal Steel, there's Hindalco, Tata Steel, JSW. They are the winners. And the Adani names as well are not doing bad. Adani Port scaling higher by about 2%. Of course, there is that impending hearing in the Supreme Court as well. Don't know if it's going to happen today or not. But Adani Enterprises as well scaling higher by about 1.25%. So it's these liquid stocks on one end. And then, of course, there is the large cap pressure which continues. At the bottom of your screens, you can see Reliance Industries turn out to be a bit of a damn squib, the AGM, in terms of no near-term takeaways for the markets to draw in. And after cracking 2,500, today it's a test of 2,400 as well that you're seeing on Reliance, down by about 30 points. And that's clearly pressurizing the index. In fact, Reliance is today the top drag as we speak. There's, of course, Bharti as well, IndusInd, Axis Bank, ICICI Bank, Kotak, ITC, that's also not doing a whole lot. TCS, which is absolutely flat. So it's these erstwhile or traditional large caps which are the ones which are keeping the markets at bay. But let's figure out whether the market is going to spend some time here consolidating, or are we going to take a directional move. We have with us all of our experts joining in on the show. All of you, afternoon. But Kunal, if I could first take a take on the Nifty, because, this underperformance or a completely lackluster move comes at a time when global markets have been in a flurry, whether the West or Asia, like Shanghai.
I think it's extremely flat, a boring day, frankly, for the indices when you look at the Nifty.
Boring days, not just today.
Yeah, boring days for the last couple of days. Now, it's very difficult to comprehend or make sense of any trend over here for the indices because...
Kunal, I don't think you're wearing your mic. So while you mic up, let me take it across to Kush Bora as well and find out what he's making of this flat move on the Nifty and whether or not, Kush, we're going to take any directional move.
Actually, and the reasons are fairly clear. If I look at the last 10 to 15 odd sessions, we've been in a range from 19,250 to about 19,500 odd, and we've not broken that range. I mean, the only time we've broken that range is on the downwards, on the downside a couple of days back. Back there, multiple resistances on the charts, 19,400, 19,500, where the 20 DMA and the 50 DMA lie. Also, if I put one more factor into play, which is the expiry, this month, this week we have the monthly expiry, and the expiry data suggests that 19,300 is witnessing some call buildup. 19,400 already had a very strong base, going into trade today. So there could be some pressure. I don't think we are up for a big move, at least in the next couple of days on the indices, at least not on the upside. As far as Bank Nifty goes, even in the morning, I had a view that 44,500 is a very pivotal level for a very simple reason. We were, almost there, but the 44,500 call had a very strong base and wasn't giving up throughout the day. And now we see Nifty slipping, Bank Nifty slipping just below that. So very similar views. We may consolidate in a range for the Nifty and the Bank Nifty both, at least till the weekly, or in this case, the monthly expiry is over.
Sure. I think Kunal is now mic'd up. Kunal, so if we do end around 19,300 or below that mark, would that be a sign of a lot more inherent weakness?
There's no sign in the markets right now. Nothing. I mean, it's
not on the upside, not on the downside.
No weakness, no
it's
strength.
going right, going left, but still standing at the same place. It's very tough to comprehend because, Nisha, a 44,000 index on the Bank Nifty is in a range of 80 points. Now, that's not even 0.25% for the index. And that too, we are talking of not a normal day, but an expiry week where there's bound to be rollovers, then carry forward of positions, squaring off of positions, etc., which keeps the market participants a lot more busy. Now, if in such a kind of an expiry week and second consecutive day you're seeing the indices into a less than 100-point range, it's very difficult to comprehend which side the markets would probably want to tilt going forward. So, in this kind of a market, it's always best to try and play stock specific. But the concern with the markets right now is that the action is not towards most the FNO stocks, but it's towards the mid caps and small caps, and I think that's where a short-term trader could probably concentrate on.
Not much excitement at all when it comes to the trading, but is it a good time probably to invest for the medium to long term? Let's pose that question to Shubhani Sarkar Korean, who's joining us on the show as well. Shubhani, what's your take? A very, very boring market, but is it then the time to probably consolidate, look at the bets that you want to add in your portfolio?
Hi, good afternoon. So for the markets, if you look at it in two parts, one, in terms of the fundamentals and the delivery on the earnings side, we have nothing to complain about. Even in the earnings season gone by, the overall earnings trajectory for the broader market as such was largely in line with estimates. And there have been no major earnings downgrades for both FY24 and 25. So earnings trajectory remains fairly healthy. However, we have to contend that valuations today in the markets are not cheap, and valuations are above long-term averages. And whether you look at price to earnings, you look at price to book, you look at yield gap or market cap to GDP, on every parameter, market is telling you that valuations today vis-a-vis long-term averages is above long-term, above the mean level. And therefore, from that perspective, given the fact that even on a relative basis, our valuations are slightly above long-term averages, we do expect that we will have to contend with some degree of volatility in the near term. Of course, if there is any correction in the market, as long as earnings delivery continues, that would possibly be an opportunity. But at this point in time, we believe that given that valuations are somewhat elevated, markets could see some degree of volatility.
Right. Okay, let's just look at some of these movers. And Kunal, BHL, this is something we talked about, in the morning as well. What a move. Once again, after a very, very flat first or second half, actually, now the big move has come in 3.5% higher.
Well, yeah, I think that's where short-term trader is concentrating on, because when there is action into specific stocks, where there is momentum, there is liquidity, getting in, getting out of the stock becomes a lot more easier. That's where I think it makes sense, because when the markets are into a consolidated zone, the options or the number of stocks which trade in the direction of the markets, they drop down or they come down significantly. So I think BHL is one of those candidates. And the breakout which had happened for the stock last week, I think a 10% up move from 203 levels to 112 mark out for the stock, and then 3 days of mild correction. The stock has managed to digest all of that and probably restarted a new trend for itself. So it looks very, very attractive as a setup and as a chart. And I think, as we discussed earlier, I would probably be looking out for 130 plus as the next target for BHL.
Point taken. Kush, what about the entire chemical space that's definitely firing up, whether it's a Make Money Fine or a name like alkylamine, Deepak Nitrite, pick up any of these names, even Himadri Chemicals, etc. for that matter. All of those stocks are soaring. Any favorites?
Deepak Nitrite certainly looks good, because it was due a breakup, and we're seeing that today on the back of very strong volumes. Very encouraging signs here. So I would actually not rule out a move from here up until 2250 and 2300 levels as well. And for any kind of fresh entry, 2080 is where I would place my stop loss. But you're right, the entire space is seeing a lot of traction. Even some of the other names, like SRF that's actually started the rally some time ago. and UPL also seems to be catching up now, which means the entire space, anything chemicals is doing well. So if someone's got the patience to hold on, then I would suggest UPL might also turn out to be a good bet in the coming months, because now the stock is showing first signs of bottoming out. One of the last ones to perform, but then this then in that regard it has some catching up to do, right? So UPL for targets of 630 is where I would also have my something that I would have on my radar.
That's the technical side of what's happening within the specialty chemical space. But what has changed on ground? Lisa is here with her reading. Lisa?
Well, the whole chemical sector is buzzing in trade today, and the main reason is that the prices of specific chemicals are seeing an uptick. If we look at acetic acid prices, they have seen a sharp increase from rupees 57 per kg to rupees 72 per kg in the last 1 month, and it is benefiting players like Jubilant Ingrevia, Lakshmi Organics as well as GNFC. Even prices of light soda ash prices, they have seen an increasing trend. Remember that since April, the prices of soda ash in China, they have seen a downward trend. But since the last 1 week, we are seeing the prices of soda ash, they are rising. Just see in the last 1 week, the light soda ash prices, they have risen from $285 per ton to $373 per ton, and that is the reason we can see stocks like Tata Chemicals, GHCL, they have been buzzing in trade. Now, what are the reasons attributed to this? One of the reasons is that the demand recovery in China is likely on the back of the measures, the stimulus measures that have been taken, and that is likely to curb the predatory pricing that China was enjoying, and that which hit the Indian players. And this is also likely to lead to lower intensity of China dumping, because experts are attributing the unsustainability of lower prices. So these are the reasons that has helped arrest the fall. In the long term, well, we have been highlighting that India is likely to benefit from China Plus One. And also we saw that specialty chemical companies, they have performed relatively better than the overall chemical sector. And CRISIL had highlighted that specialty chemical would grow faster than China, and their share is expected to increase to 6% by 2026 from 3 to 4% currently. And if we look at the last 1 month's return, stocks that have bucked the trend were stocks like Himadri, Specialty, Archean Chemicals. They are into niche, diversified space, and also they have a diversified export presence. So they have benefited, and that was rightly mentioned by Ajay Joshi, who recently came on our channel, the chemical expert, and he highlighted that specialty chemicals will be the first to recover, while the segments like agrochemicals and commodity chemical companies, they will take some time to recover. So that's on the chemical, the reason behind why the chemical sector is buzzing in trade today.
Lisa, for summarizing all of that, but let me pose that question to Shibani as well. Shibani, is chemicals a space that you're looking at actively investing into?
Yeah, so chemicals, actually, specifically the specialty chemical basket, has been one segment where we have been structurally positive. Now, what has happened and what was being discussed on your channel just recently is that over the last 1 year, we've seen that there has been slowdown in discretionary demand globally, and that has impacted the chemical companies. Also, there has been elevated channel inventory, which has also impacted the pricing, plus the dumping from China, which had an overall impact. But if you look at this sector on a more structural basis, we continue to remain fairly positive in terms of growth. We believe that the specialty chemicals sector is a segment where, on a slightly longer term basis, growth should continue to remain positive. The sector continues to remain a beneficiary from a China Plus One strategy. And India, in terms of market share in the global specialty chemicals construct, market share of India is fairly low. And therefore, we believe that any increase in market share would lead to strong structural growth. So that is one segment we are positive on. And plus, what we've also seen is that many companies have set up capacity, so investments have been made. And therefore, as and when the demand revival starts, possibly in the second half of the year, some of these specialty companies are pretty well placed to capture that demand momentum and get back on growth. The sector has underperformed over the last 1 year. However, now valuations are looking a little bit more reasonable. And given the fact that long-term growth prospects remain intact, this is a fairly positive space for us in our portfolios.
Take coming in on specialty chemicals. Let's see what the high flyers from yesterday, Piramal Enterprises, Indiabulls Housing, etc., are up to as well. Remember, they were the ones which had a bit of a field day, at least in yesterday's trading session. Of course, after the AGM takeaways coming in from Piramal and Indiabulls Housing, of course, many triggers coming in there. Firstly, our sources indicating that not just a name change, but they've also applied to the regulator to consider a certification change application soon, and they're looking to convert the company into an NBFC. What the MD and CEO told us as well, that they have indeed applied to the regulator for a name change. And of course, it's the loan repayment which is really acting well for them. In fact, let me take it across to Ashesha and find out what more are the developments at Indiabulls. Ashesha?
Well, yes, Indiabulls Housing Finance and focus on the back of debt repayment that the company has done, and the company also reiterated its growth plans going forward. As far as bond repayment is concerned, the company said that they've repaid bonds worth about 1112 crore rupees, which they had availed in August 2013. The company also said that the company has achieved large debt servicing in the second quarter of FY24. As far as their debt position now is concerned, the debt position at the end of second quarter will be down to about 36,000 crores, and net debt to equity will stand at just 1.8 times. So a big positive that could probably come in for the stock. As far as their growth plans are concerned, the company reiterated that from here onwards, company will now enter a phase of positive ALM, where loan portfolio inflows will exceed debt repayments by about 1300 to 1800 crores per quarter, all of which will now be available for asset growth. The company is now firmly focused on growth, and they said that because the business model is asset light, the company will not lead large borrowings from here on, and the company can earn on the entire AUM without building any ALM risk. So positives coming in for the stock, where they've repaid debt and they've also reiterated their growth plans going forward.
Thanks, Asesha, for that. Time now to slip into very short break, but as we do that, look at the stock of Vaibhav Global, because that stock is seeing a bit of a surge. You also have KPR Mill, which is seeing a bit of a rub-off impact of what's happening in Gokuldas Exports, perhaps, because that stock too is seeing a surge. And then you have Shipping Corporation of India, a BEML, a Chennai Petro. All of these stocks are doing well for themselves. In fact, we'll discuss all of these stocks with our technical experts when we come back, but time now to slip into a very short break.
Back with closing trades right here on ET Now. Nothing really happening, at least at the index level. Quiet as quiet can be. 19,326 is where the index is absolutely flat. We've been highlighting some of the broader market stories, though, which have been holding out. And Piramal Enterprises, let's just bring up that stock up for you, because it seems that it's on the way forward, stepping back into growth mode. Top housing-led diversified retail business. That's what they intend to do, and that's been the drawdown coming in from the AGM takeaways. Having said that, a lot of brokerages reacted to their AGM takeaways just this morning, stating that Piramal Enterprises already has seen a lot of run-up in the stock price, thereby some of them reduced their targets. So Piramal Enterprises sharply under pressure today, actually. 4.25% down is where that stock is. Kush, let's get your reading on the charts for Piramal.
Multiple timeframes, across timeframes on this one. 1100 does seem to be a bit of a stiff resistance, and this is where the fundamental and the technical view sort of collide or combine rather. If I look at derivatives data also, even for the next month, 1100 has a very strong call base. So this is probably going into a consolidation mode. You'd find the stock spending some time from 1000 to 1100 kind of a range. So I wouldn't be looking at a fresh entry, at least from a momentum perspective on this one. This will perhaps consolidate. I mean, if someone's got an existing position, no harm in holding this. There isn't a structural damage, but the upside for now seems to be limited to about 1100 zones.
So that's a take coming in on Piramal Enterprises. Quite a bit of run up already. But Shibani, what's your take on the real estate names? Should one still look at buying afresh into the sector?
Structurally positive on the real estate pack, but as you correctly pointed out that the sector has seen significant outperformance. Within the entire real estate bucket, one segment where we think that there is an opportunity set is the home building space, which benefits with a lag in terms of the real estate activity that we are seeing. So whether it be cement, tiles, ceramics, pipes, all of this which derive significant amount of demand from the real estate space seem to be favorably poised from a growth perspective. Also, within this segment, what we have seen is that input cost pressures have come off considerably, and therefore margins should likely expand over the next few quarters as well, which will help in terms of supporting earnings and profitability. And therefore, the entire home building pack looks interesting at this point in time.
Shivani, great to have you on the show. Thanks for joining in as always with your thoughts. That's the word coming in from Shivani Sarkar Korean. But as promised, here's an ET Now exclusive. We learn that BNP Paribas is looking at exiting Sharekhan and a lot of suitors have lined up. Let me take it across to my colleague Samit Sarkar. Samit, what is it that you're picking up from your sources?
Well, what we understand from our sources is that BNP Paribas is looking to completely exit from the retail broking arm, that is Sharekhan. Now, BNP Paribas owns around 100% stake in Sharekhan, and they had acquired or completed this acquisition back in 2016 for around 2,200 crore rupees. But now they are valuing this deal where they're looking to sell their stake at around 370 to 420 million US dollars, which is close to 3,300 to 4,100 crore rupees. Now, what we understand is that 5 bidders have shown interest. 3 of them are domestic, while a couple of them are international MNCs. Now, on the international MNC side, it's a Japanese and a Korean MNC which have shown interest, but on the domestic side, it's a Jio Financials, Paytm and Bajaj Finserv is what we're understanding. Now, for Paytm, this acquisition would make sense because they already have a retail broking and digital investing app, Paytm Money, and Paytm Money has around 7 lakh active clients, and in fact, Paytm Money's current CEO, that is Varun Sridhar, was part of BNP Paribas and then Sharekhan for around 7 years. Now, for Jio Financial, this acquisition would also make sense because it would give them a good head start, or in fact a strong head start in the retail broking space, while for Bajaj Finserv, if you see, their retail broking arm and loan against a share business has been quite struggling, and this would give them a good boost in this business. Now, why PNB Paribas is looking to exit? Because their core focus is not on retail broking, and hence they have been also selling their shares in Jio Financial is what we have seen. Now, we also tried to reach out to all the 4 parties, that is BNP Paribas, Paytm, Jio Financial and Bajaj Finserv. Jio Financial and Bajaj Finserv are yet to respond to our story. PNB Paribas did not offer any comment, while Paytm spokesperson have denied the story. They have said that this is completely incorrect and they have not placed any bids so far. But what we are understanding from our sources is that these 3 parties have placed a bid for Sharekhan and the value is around 370 to 420 million US dollars.
Okay, thank you so much, Samit, for getting us those exclusive details. We'll watch out for what really happens. Looks like Sharekhan is on the block and there are enough suitors to really take that up as well. But just shifting focus to talk about the newsmakers of the day, we spoke with a whole host of management, the likes of Gokuldas Exports, etc., which is locked in upper circuit. Star Health also talked about a very positive commentary. Listen into what they had to say.
With this asset, we feel that we'll get access to a very well-run organization. It has been in this business for over 3 decades, or about 3.5 decades. It's got excellent client base, which is very complementary to the customer base that we have. And it has got presence in duty-free, low-cost regions. We've priced the acquisition right. We believe we've been fair in pricing it. And we believe that the possibility of revenue growth as well as margin growth in that asset exists. Over the next 2 to 3 years, once we get control over the asset, we will start working on upgrading the plant machinery and expanding the business as well.
L5 category vehicles, that product has been homologated. We are likely to commence commercial sales very soon. What I can tell you is business outlook is good. We are confident that with growing numbers, obviously, that is going to take care of bottom line. See, the new alternate fuel 3-wheeler, which covers petrol as well, we started seeking it into overseas market. Currently, our 10% revenue comes from export, which we expect that it will grow in a medium to long term to the tune of 20-25%.
We have been estimating that we'll go 20% and above in the short term as well as long term, 3 to 5 years. We are well on course to achieve the growth targets, and it's an all-round growth. So while there is inflation in the hospital bills, there are ways and means to ensure that, the customer is not impacted to the price increase. And we believe that there are a lot of claim efficiencies which will come in, which will ensure that, we are able to efficiently manage this whole inflation.
Okay, so those were the big voices of the day, but let's also listen in to what our charters have to say with respect to the closing trades that they're punching in. Kush, you go first. Kush, you'll have to unmute yourself.
Am I audible now?
Yes, please go ahead.
Sure, my bad. One stock that's just popped up on my radar is Gulf Oil. This stock was actually doing rather well, and we saw a dip, but today's the first day of recovery. But then this is after 3 days of base formation. So Gulf Oil looks to resume its uptrend from these levels. 595 was my first target. The stock's actually run up quite close to that. Second target is 610. You could still enter into that. For targets of 610, 565 is where I would place my stop loss. So yeah, Gulf Oil looks like it's got a strong recovery on the cards.
What about your closing ideas?
That'll be Voltas, and after quite some time, the stock has come back into a breakout mode, bullish flag pattern on the daily charts, and would expect that this could be a start of a very strong up move for Voltas going forward. So that's a stock which I would look to buy as well as advise the clients.
Okay, that's the take coming in. Some of the closing trade ideas from our experts. Voltas coming in from Kunal. Let's just revisit what else is happening. Piramal Enterprises, by the way, is now down almost 5%. Indiabulls Housing, which is in F&O band, down about 2% as we speak. There's Glenmark as well, which is down 1.5%. There's Polycab, which is down 1.5%. And then Godrej Consumer Products as well, which is down about 1.25% or so. Let's pick up one of the stocks that we had flagged off being one of the big movers yesterday. Of course, that was L&T. Today, too, you're not seeing as much of a move on the stock, but about 0.5% uptick still. M&M as well, 0.4% higher. And this also, remember, was a big mover in trade yesterday. Kunal, what for those who are looking at a fresh entry or looking at adding positions onto L&T, is right now a good time?
Yeah, it's a good time because the stock, even though it's perched at a new high, it's gone through a very slow, gradual uptrend. So I was actually looking at the beta for these stocks, calculating the beta of the stocks in the last 3 months with respect to the comparison of the last 6 months to 1 year for the stocks. And surprisingly, the beta for L&T is significantly low as compared to the benchmark Nifty, which means even though the stock is moving up higher, it's on the back of very stable trends. So the beta is, I think, 0.74 for L&T as compared to 1 for the Nifty. And the beta for M&M is actually 1.1, 1.12, which means that the stock is a tad bit more volatile as compared to the benchmark index, as well as in comparison with the other large cap name. So I think in both those aspects, L&T stands out to be a good bet even at current levels.
Okay, that's a thumbs up for L&T and so for M&M as well, but more L&T. Let's take a very quick break on that note, but hear it out from Milind Karmarkar from Dalal and Roja Portfolio Managers. He expects a major freight to move to railways from roads, and private sector orders to only rise for freight wagons.
When it comes to railways specifically, I 100% agree with you that it's dependent on orders from the government. But there are companies in wagons where significant portion also comes from private sector. And what happens is that once the direct freight corridor is ready, then I do expect a lot of freight to move to railways from roads. And that is where I think the growth will come in. So it will not only be government orders, it will also be private sector orders, especially in wagons, which will drive the sector, especially the segment where, as far as wagons are concerned. As far as Vande Bharat is concerned, again, there is a large opportunity. But I think there, the issue will be that the first Vande Bharat from the private sector will roll only in 26. So one will have to wait for that time. But wagons is something where I think the growth will continue over the coming 2-3 years as well and beyond that.
Where is growth according to you? Where do you think there is visible growth? Let me rephrase that for next 3 to 5 years. Double digit visible growth for next 3 to 5 years.
So that is in power ancillaries, and that could be in railways. So these are the two sort of sectors where I see double digit growth in the sense anywhere between 15 to 20% growth.
Welcome back. Well, the Nifty is still around that 19,300 thereabouts, so not seeing a bit of a pickup from there, just continues to be around that level. So let's go across to my colleague Prakash. He's joining in to talk to us about an exclusive, because it looks like that there could be a bit of relief coming in for consumers, given that there could be a price cut happening for the LPG cylinders. Tell us more about this, Prakash.
Yeah, it's a big development coming in, as sources are informing that the consumers may get big relief going forward. And as we have learned from our sources, that the cabinet has decided to provide additional subsidy for LPG customers. Around 9 crore LPG customers are there in the country, and cabinet has decided to provide additional rupees 200 subsidy on every cylinder, which means the overall subsidy amount will be increased to rupees 400 per cylinder, and that is something the consumers are going to get big relief. Sources are also informing that there will be no impact on oil marketing companies, as the cost that is going to incur on a subsidy amount, additional subsidy amount, will completely be bear by the government, which is around 4,000 crore during current financial year. So it's a big development coming in, and short from here now, we are expecting a cabinet briefing around 3:30 p.m. by the government, where the formal announcement will be made. So during time of high inflation, it is big decision that has been taken by the government, and Ujjwala customers are going to get big relief. And after announcement by the government, the effective rates will be implemented.
Right, okay, Prakash, thanks much for those details. In fact, another 80 Now exclusive coming your way. And, you know, we learned that Anupam Rasayan is likely to buy out an Austria-based firm. Let's try and understand a little bit more about this. Anurag Joshi, my colleague, joins in with more on the same. Anurag?
Yeah, that's right. So Anupam Rasayan, which is a chemical maker, so that is close to buying an Austrian chemical company called ESM Chemicals. Now, Anupam Rasayan has an exclusivity pact with ESM Chemicals, which is based in Linz, Austria. And it gives it the edge in buying the company, and the enterprise value, according to our sources for the deal, is pegged at $200 million. Now, to give you a little bit of history about ESM Chemicals, the history of the ESM Chemicals plant near Linz in Austria, that goes back to 1939. But it was only in 2015 that ESM Chemicals was set up as an independent company, and in 2018, the UK private equity firm Sun European Partners bought a controlling stake in ESM Chemicals, and now Anupam Rasayan is close to buying this company.
Okay, so another chemical company in focus, and this one is on account of a possible acquisition. Thank you so much for joining us. But in the meantime, let's take a look at some of the other counters as well. You have Chennai Petro, which continues to see quite a bit of spike, so that stock is up around 10%. You also have names like Vardhaman Textiles, which are perking up, and this apart from KPR Mills, which was seeing quite a bit of spike earlier in the trading session as well. On the losing side, it's railway stocks which are seeing a bit of a drubbing. So Titagarh Wagons is seeing a bit of a profit booking, down about 7%. Union Bank of India, surprisingly, that stock is down almost 6%. There was an additional flow coming in because the QIP stocks got listed, so maybe it's the supply pressure which is having an impact. And DB Realty from the real estate pack is a sore loser, because apart from that, the rest of the real estate names are doing quite all right. But let's take the discussion forward and welcome on board Kunj Bansal on the show. Kunj, just wanted to get a sense from you with respect to the market itself. Very, very slow, very, very sluggish. What do you do in this kind of markets?
So these kind of market are indeed required. Otherwise, the fresh money coming in will not get the valuation comfort. Just to put some numbers in context for our viewers, it was around 19th or 20th July, that is in the last month, that we had touched close to 20,000 in terms of Nifty. And from there, we are kind of in a range bound movement. Of course, on a net basis, if we will calculate, we are down about 3.5% in 1 month or so, which is quite okay. So what happens is, when market starts to take a direction either upwards or downward, it obviously can't keep moving in the same direction forever, because especially if we talk of the upward movement of the market, then the valuations will completely become unaffordable, so to say. and the fresh money will not find valuation comfort to come in. So market always goes, touches a milestone, and then comes back and gives opportunity to the investor. If we look at some other factors, we can see that after the continuous inflow of global money coming in last 3 months, leaving August. So in July it was quite net positive inflows. Before that June, and before that in April and May also. In August that has not been the case. August the net inflows and outflows from global money are balanced against each other. There is hardly $1 billion plus kind of number, which is quite flattish. So that's a short-term phenomenon. In terms of triggers, we are more or less run out of the trigger in the short term. The result season was over few days ago. Monsoon progress has been mixed. So market is at a stage wherein it is not finding any reason to take a direction, and which is where we are. And as I said, which is quite okay.
Right. So Kunj, are there any opportunities that you're identifying?
Yeah, so in such kind of markets, the opportunities, one for the short-term traders will come more from the technical chart patterns with their strict stop losses and things like that. For the medium-term investors, yes, there are opportunity if we go by the numbers, the quarterly results that came in for the quarter gone by for the June and even before that, and the expectations. So, and along with that, if we mix the broader macroeconomic developments and news flows and actual numbers, we can continue to see that the heading into the election next year in 2024, we will have a lot more spending on the capital expenditure coming in from the government. So that is a space, whole capital goods and engineering space, despite valuations and absolute prices having gone up, I think will continue to give good returns. Auto has taken a breather after rising in the first 6 months of the calendar year, will probably start giving an opportunity again. And rural consumption is one theme that is still in the waiting mode or the watching mode, but looks like given although the monsoon progress has been mixed, but there are some mixed signs right now of the rural demand picking up. If that happens, then that is where we will again see opportunities. So these are the spaces.
Still some spots that you can look at to make incremental investments, but time now to go across to my colleague Sharad. He's joining us to talk to us about what's the latest cover in the dealing rooms and chatter. Hi Sharad.
Well, yes, in focus we are having Vedant Fashions, and what we are hearing from the dealers is certain buying is being seen from the counters of the DIs, especially in the boutique investment firms which are registered in India. Apart from this, also looking at the volumes, it's coming at almost 10 times its 20-day average, and already the key DI investors already invested in the company include the likes of SBI Mutual Fund and Axis Mutual Fund as well. Apart from this, also the channel checks are suggesting that the strong inquiries have started coming up for the festive season as well. And also recently when the company actually came out with its con call, and they had stated that a strong demand recovery is expected in the second half of FY24, and positive commentary coming in from the emerging new brands which are on the higher margin side, and these brands includes the name of Mohe as well as Tiamev. Also, the company has been weaving over the last 2 weeks certain marquee HNI investors as well as domestic fund houses. However, of course, the Q1 numbers were weak because of the seasonality, and from the June highs itself, the stock did fall by 9%.
Vedant Fashions, that's the one name. In fact, Metro Brands is the other as well. We just had the management today on the channel, and they were talking about as to how the aspirational Indian is willing to spend for premiumization. We've actually seen that, right, across the luxury end of the curve. I mean, be it real estate to cars to even some of the discretionary consumption names. Kunj, that's where investors have made money, and that continues to be the consumer's choice as well.
Yeah, so while we do have stress on, especially on the rural demand, maybe partly on the urban demand also, the inflation has been kind of made it difficult for people in the middle and the lower middle and even below that to go and do discretionary spending. So their focus has been to focus the spending on more on the basic requirement, that is the food. But yes, at the same time, there is this dichotomy that the higher end spending continues to be there. We have all the airlines which are running reasonably full, high load factors. We have the hotels and the restaurants which are running full. We have the multiplexes, if the movies are good, which are running full. And we have the higher end consumption, let's say the four-wheelers, passenger vehicles which are running full. The same gets extended to the higher end consumption in the durables and non-durables as well. Also, along with that, what we notice is that some of the companies, some of the managements have really built strong business models. So they have built strength in terms of either the distribution, both physical as well as online, and also have been able to maintain the pricing power. Thankfully, commodity prices have been supportive in the last 9-10 months. So that got reflected partly in the margins for the June quarter. Hopefully, should continue to get reflected in the September quarter as well. And that's where we have seen, of course, the fact that the money continues to come in both from domestic investors and global investors. So they do keep looking for such kind of well-managed businesses, irrespective of valuations.
Okay, point taken, Kunj. So that's a take coming in. Just quickly looking at some of the other names as well. BML is one stock which is doing quite all right. What's your view on that, Kush, and the other buzzers as well? Gujarat Pipavav, we don't usually talk about that counter, but seeing quite a bit of momentum build up today. And then, of course, in terms of the other volume buzzers, you have names coming in like Make Money Fine Chem as well.
Pipava, you're right. There's a very clear, volume breakout here. But the stocks actually come off the high point of the day. 130, 131 is where it hit and just come off the highs. However, this is a breakout above, the 125 kind of zone. So I expect this momentum to continue. This is just kind of, profit booking that we are seeing and close to the end of the day. So this stock does warrant a fresh entry. I wouldn't rule out a move back to 131 and even 135 kind of zones, in the near future. 125 is where I would place my stop loss. As far as, Make Money Fine Chem, similar story, but this has come close to resistance zones. So, this is the one that I would avoid for now. BEML stock was in an uptrend, due a breakout, but now it's actually gone into overbought territory. So again, this is only for the ones who've got an existing position. So hold on to this one with a stop loss or trailing stop loss rather close to 2425 kind of levels. The stock could move up to 2500 plus kind of levels, but the risk reward ratio won't favor a fresh buying from here on.
Okay, let's move on and let's also talk about some more info that we are currently picking up. And this time around, it seems that ET Now sources are indicating that there's something up on Jio Financial Services, and that promoter entity Jamnagar Utilities has actually bought stake into the company. Amidst all the block deals that's happened on Jio Financials of late, Sumit, tell us what is it that you're picking up from your sources?
Well, Jio Financial remains in focus. What we are understanding from our sources is that around 5 crore shares have been bought from the promoter company, that is Ambani family company, Jamnagar Utilities. So 2.5 crore shares were bought on the BSE and 2.5 crore shares were bought on the NSE, and these deals have happened today in the morning at a price range of around 208 to 211. So a total of 5 crore shares have been bought in by the promoter group, that is close to 0.7% stake. Now, Jio Financial is a recently listed and demerged arm of Reliance Industries, the financial arm, and for the first 4 trading sessions, we had continuously seen a lower settle on the share prices. Post that, the trading has stabilized on this counter, and today the promoter group has gone ahead and bought nearly 5 crore shares from the open market, that is close to 0.7% stake. So keep an eye out for Jio Financial.
Interesting one on Jio Financial. In fact, on an intraday basis, we did see quite a bit of recovery on the counter. Let's pull up that name and see, because it was very, very somber in the trading session, and then you saw a big spike, and now the stock is holding up with a gain of around 4%. In fact, reacting to the story that Sumit has told us exclusively, that the promoter is looking at probably increasing the stake as far as Jio Financial Services is concerned. At least that's what they have done in the last couple of days as well. But coming back to the markets and taking a look at what are the spaces that have been doing okay. In fact, for the year, we have seen that the power stocks have made a sharp comeback. Kunj, what's your take on that? And would you probably hazard a take at the PSU names as well, the NHPC, SJVNs of the world?
So these are the calls which are always difficult, as we were discussing earlier, that we indeed are seeing and will continue to see heading into the election next year, a lot of spending by the government on infrastructure, which includes power as well. Power in any case has been a focus area for the government, otherwise also irrespective of election, more specifically renewable. And a lot of companies and managements have built their business models around that. And that is already visible in the kind of return that the power sector in general has given in terms of share prices, and also the companies in their financial performance. Looks like, yes, that will continue to be a space that will continue to outperform given the overall positive sentiment that is there towards the market, towards the macroeconomic numbers of growth that we are seeing, and towards the investment that will continue to happen in the power sector, both by private players as well as by the public sector.
Right, okay, that's the take coming in on Jio Financials. That is one stock which has really been all over the place. You know, we've been talking about all the defense as well as the railway names and how this entire PSU pack has really been moving higher. Look at the year-to-date change on some of these names. The Masgar Dock, for instance, has moved up 133%. Cochin Shipyard has given you a return of about 58%. Hindustan Aeronautics has moved 54%. BEL 33%, and Bharat Dynamics as well, which has given you a return of about 19% year-to-date. Railway stocks, even a bigger move coming in there. Titagarh Wagons, 260% jump up. RVNL, 81% move. IRFC, 47% move. And IRCTC, although this has been, not really a like-to-like comparison, but a 2.5% move coming in there. Not just that, a new sector churn which has taken place in the market, that of the power as well as the power ancillary names. So REC, 109% uptake, PFC, BHEL, NTPC, NHPC, as well as Power Grid. All of these stocks have chugged along very, very nicely. Kunj, wanted to get your thoughts in on the entire power pack, both pure play as well as ancillaries there.
So the names you highlighted from across the three sectors, if I mix them and if I put those together with your question, the defense, the railways, and the power, largely come from the public sector space, the PSU companies. Now, that is one space where we have clearly seen the focus of the government coming in terms of supporting the business models of the companies under its ownership, that is the public sector companies, in multiple ways. One in terms of policy support, two in terms of the backing to the managements, three in terms of creating supportive environment like Make in India, like forcing them to look beyond India to market their products and services. And of course, actual release of orders across all these three spaces. So there have been significant release of orders in the whole railway space. There have been significant release of orders in the defense space. And so has been the case with the power. Now, coming to the companies and the sectors and the valuation, they were anyway significantly undervalued because of the underperformance of last so many years. That also led to the under ownership, let's keep in mind, mainly from the institutional investors, both global as well as domestic. Now, these three factors put together, the increasing financial performance, mainly led by the supportive government policies, undervaluations getting it right to coming to the average, I wouldn't say it has gone over valuation, and under ownership also getting covered up, has resulted in this kind of performance, and that's really good that we are seeing new investment opportunities being available to the incremental money to invest in the market. Otherwise, somebody has to invest in the market. You had those standard automobile, FMCG, banking sector names to come in terms of these strong business models. If you extend a little bit, maybe some consumer durables and cement and IT and pharma will come in. But then there was a caution going ahead into the cyclical kind of sectors, which is where these new spaces have emerged. And that's really been good for the money which has come in, as well as for the overall sentiment of the market.
The sentiment of the market right now is not that great. Yes, we have managed to perk up from the lows of the day, but not a big runaway rally at all. It's 19,350 is where we are at the moment. But you know what? It's the Adani group of stocks which are seeing a bit of a perk up as well. So let's go across to my colleague Sharath. He's joining us to tell you the latest as to what's brewing with these counters. Hi, Sharath.
Well, yes, in focus we are having Adani Group, and what we are hearing from our sources is that Enforcement Directorate's investigation has revealed that a dozen of FPIs and FIs have actually profited from the short selling scene in the Adani Group stocks. Apart from this, out of these 12 entities, 4 are based in Mauritius and the remaining are actually based out of France, Hong Kong, Cayman Islands, Ireland as well as London. Apart from this also, none of the FPIs or the FIs are actually disclosed their ownership structures to the income tax authorities. Apart from this, earlier the Supreme Court appointed expert committee had actually stated earlier that the short sellers had made profits and were active on the Adani Group stocks. Apart from this, between June 24, 2023 and the dates of February 27, 2023, the market capitalization of Adani stocks dropped almost 12.4 lakh crore rupees or almost $150 billion. Lastly, the maximum damage was caused to the retail investors. So important development coming in.
Important development coming in, and we are watching for the Adani group of counters as well, but can't take the eyes away from what's happening in Jio Financial Services. We just told you that the promoter has purchased the stocks from the open market, and look at the surge on that counter now. It's locked in upper circuit, a 5% up move coming in. Since its listing, it has been very, very volatile and wobbly. It was locked in lower circuits for past many days, but now you see that the stock is around that 221 level. The discovered price earlier was close to around 260. It's still lower than that, but for the day today, it has seen quite a bit of recovery from the low point of the trading session, and that's all because the promoter has added stake from open market, and that's giving a lot of confidence to the stock price as well right now. But coming back to the rest of the market as well, for the year so far, of course, it's real estate which has done well, and then auto stocks as well. In fact, Kunal, we haven't spoken about the auto stocks in a while because not much is happening in that space. But is there any stock which would still look at maybe adding a Tata Motors or others as well?
Other than M&M, which we discussed.
So yeah, other than M&M, Tata Motors now I think at 600 looks attractive. It's come back towards a good support zone, but my sense is that the stock would go into a time-wise correction. So from a risk reward, it would be very attractive to enter the stock. But from a immediate return perspective, I would not be too much optimistic or extremely optimistic on Tata Motors from a very short-term view. Unless you have a time horizon of 1 year or so, you should ideally avoid the stock. The other name, that's Ashok Leyland. That's a chart which I think is also looking a bit more attractive at 180 plus levels. The stock is reconfirming a breakout for itself. So it's a very slow mover, but then the stock on multiple time frames has confirmed the breakout for itself. Escorts, of course, that stock has also managed to inch significantly higher to 3000 plus levels. So maybe on retracement of 40-50 rupees from current levels could be a good buy. So there are other candidates other than M&M which are looking attractive. But then the traditional auto stocks, the likes of maybe Hero MotoCorp, Eicher, Bajaj Auto and Maruti, these stocks are nowhere close to any kind of a breakout.
Point taken. In fact, what do you make of HDFC Bank, Kunal? Because yesterday as well, that stock was high around 1%. That was one of the top contributors. And today as well, despite the weakness, that stock is holding up with a gain of 0.8%.
Yeah, it's looking quite okay. But then again, it's net 2 days of gain, 2 days of loss. It's still at 1600 levels, maybe plus or minus 10-12 rupees for HDFC Bank. In fact, the last 7 or 8 days, the powerful move which has actually come back into the private sector banking stocks is on Axis Bank. The stock has come back towards 980, 985 approximately the last I had seen. So, that stock is looking a lot more stronger in this leg of uptrend. HDFC Bank, Kotak Bank and most of the other names, ICICI Bank, etc. These stocks are still struggling broadly.
Okay, let's take some of the other picks as well from our chartists. I'm not sure if we have discussed the BTST idea so far, but so let's go across to Kush and get those names as well. Kush, what do you have for us in terms of buy today, sell tomorrow ideas? Kush can't hear you. Okay, why not? Let's take the calls from Kunal for now.
Well, I'll go with a couple of buy calls. The first one is on Dalmia Bharat. That stock has come back towards above its 50-day moving average. So would suggest a buy, 2120 as a target and stop loss at 2015 rather for Dalmia Bharat. That's a slight change. And NTPC is the other stock which I strongly believe is heading towards another round of a breakout. So a stock which was consolidating, forming a flag pattern on the daily charts, would be extremely optimistic for a near-term target of 230 and higher. Stop loss at 216.
Okay, and if Kush is ready, can we go across to him now? Okay, not yet. We'll do that in just seconds from now. But let's just mark what we are closing in for the day at. Absolutely flat. There's nothing of a move really coming in on the index. It's a bit of a tug of war between Reliance at one end and some of the Adani group of names and metal counters at the other. Not a whole lot is actually holding up by way of frontliners. Of course, it's L&T and M&M which have seen a bit of a follow-through move coming in. But besides that, you're not seeing much of a move. Not just Reliance, but you've got a Unilever, Bharti, IndusInd Bank, ITC, Axis, Kotak. A lot of these stocks under pressure as well. Kunal, as we draw closer to expiry, do you think we are likely to see maybe pressure or gains on the Nifty Bank?
Not really. I don't see anything major materialistic change. So, I've seen this phenomena that for weeks when a stock goes into a downtrend, the real trend actually emerges one day post the start of a fresh expiry. So maybe I think from next week onwards is where I would believe that you could probably see some short covering coming back into these private sector banking stocks, which have been huge underperformers. But for the next 1 or 2 days, I don't see any major trend materialistically changing.
Okay, that's the take coming in on what's happening.